Come on, going live, going live, going live. Okay, and we're live now on YouTube. So good morning, everyone, and welcome to another episode of the Crypto Hour. Today, I think, if anything, we should call this episode Fun and Games. For both, what is going on in crypto, but also what is going on in, in the economic arena as well, with the announcements we had this week in the US and also kind of like Europe and Japan. There is quite a lot to consider. Okay, and also what's the stock market doing, and is it do the economic indicators agree with the current surge in stock market prices or not? Okay, so let's start. I'll start sharing my screen so I can show you a few things. Now, as you know, we had last week, we just moved away, sorry, changed things slightly. So let me just go up to start with a with Bitcoin. Okay. Now, what happened last week is, on Monday last week, is that the SEC sued Binance US and Coinbase, and mentioned in the filing mentioned a few coins that were considered by the SEC as securities. Okay, that included the Binance token BNB, included Cardano, also Solana and Matic. Okay, so obviously, after, you can see here, last Monday, after the announcements, there was a big drop in. I'll just show you the chart for Bitcoin. Okay, just to show you the effect of this kind of announcements. Okay, so the price dropped from about 27,000 to 25.5, but it soon after recovered to the level it was before the announcement, and actually a little bit higher, if anything. Okay, the other thing, the thing that is difficult to explain, and that why you should start thinking in terms of fun and games, is this drop here. Okay, I'll just highlight it for you. Oops, sorry. Okay, so this is quite a significant drop. Okay, again, a similar drop from the one that we had with the announcement, and and really these announcements normally follow. Sorry, these drops follow some sort of news event. Okay, like here, for example, is the interest rate announcement from the US, the meeting of the Federal Monetary Committee. This was when, again, we just said, when the SEC sued Binance and Coinbase. So let's have a look at this one instead, the one in the middle. And let's have a look at the time. So I always got the Zoom controls in the way. So if you look at the timing of this is the UK time, obviously, because I'm in the UK, 5 a.m. Okay, so that is midnight in the US, and the middle of the night in Europe, very early morning, let's put it that way. Okay, so who would actually put a sizable trade that would move the market this much at that time in the night or in the morning, and why? Because if you are a seller, you want to get the best price for what you are selling. Okay, so really, if you are moving a big quantity of Bitcoin that you want to sell, when would you do it to get the best price? You would do it in the periods of higher liquidity. So the higher liquidity generally and this is for all markets, by the way, at least for most of them, are when both Europe and the US markets are open. Okay, so you'll be looking at something around, between 11:30 a.m. and 2:30 p.m. in London, which would be kind of like between, let's say, around 7 o'clock in the US to kind of like 11 o'clock, that kind of time frame is where you would try to put your trade through, so that it wouldn't affect, because there's lots of liquidity. It means that there will be more people willing to sell the bitcoins, sorry, to buy the bitcoins that you're going to sell. So the price wouldn't be affected too much, because you see what happens here when this sale is put through. If it's a big sale, it means that the first little bit of the sale is sold at this price, then the next little bit is sold at this price, and then it carries on going down and down and down and down. So the average price you get is actually quite low, where if you sold it at this time, it would be a much higher average price for yourself. So that's the reason. It sounds like this is a orchestrated sell for the main purpose of crushing Bitcoin's price. So this is our reading. I might be wrong, but there's nothing going on Saturday, kind of like Friday night, Saturday morning, that would justify a drop like this. Okay, and I'll show you a few, going into the article, I will show you a few articles they actually do seem to support that thesis. Okay, now let's go into see the economic announcements we've had this week. It's been quite a busy week, as you can see. I just filtered the more important announcements on the week. And you can see we started the week on Tuesday with inflation numbers for the US, which have keep cooling down. So the inflation is going in the desired direction. Okay, so it was 4.9%. The expectation was 4.1. It was actually below expectations as well. So it was 4%. The CPI figures for the US. And then the other day after, we also had the producer price inflation, again coming down even below expectation. So this is not as good a number, I suppose, as this one, because it's kind of like there isn't as much competition for buying industrial goods. So that means it can generally implies a slowing down of the economy when this number is going down. At least in periods they are not very, very highly inflationary. And then on Wednesday we had the big announcement of the week, which was the announcement of the interest rates in the US, which, as expected, have paused. Okay, so there hasn't been an increase this month as was expected. Okay, but the thing to watch is, and what everybody watches, is not so much when this is released, but it's what follows, is the press conference afterwards, because everybody's trying to decode what the intentions are for the future. Okay, so if we see the what came in the press conference after, it came across as very hawkish. Like they were talking about, yes, they are pausing, but there might be some more increases down the line. So we are keeping the rates at 5.25% for now, but there might be another couple of increases before the end of the year. Now, and this is kind of like where we start playing fun and games, because is this likely? The likelihood is that this is not going to happen. Okay. Now, why they need to come out and say these things is because they're trying to basically steer the markets in the direction that they want to. So if they come out and saying this is a pause and we're not going to raise interest rates anymore, that would have caused probably a short-term crash in the stock market that has been rallying of late. So they need to keep the narrative. Sounds like they are kind of talking tough, even if in reality this is for them the base case scenario that they imagined during the pandemic, a year and a half ago, and they don't want to kind of like change anything that could derail the whole recovery. So what they are what they are seeing now and what they are expecting is that a soft landing on the economy with either no recession at all or a very shallow recession, which was the best, as I said, the best case scenario that they were envisaging before. And by no means they will want to threaten that scenario by raising interest rates again. Then following that, yesterday we had the interest announcement in Europe again, which was as expected. Interest rates were raised by 1/4 percentage point to 4%. Both Europe and the UK are kind of like behind with their interest rate rises behind the US, which was the first mover, so to speak. And interest rates in Europe and the UK are still playing catch up for that. So where the US can now start looking at plateauing and then eventually start cutting, probably in Europe and the UK will still be rising for some time to come. Okay, and at the moment we're seeing kind of like good numbers coming out in the US, and retail sales are higher than expected. The manufacturing index starts seeing a positive number again that we haven't seen for a little while, and as you can see, there's quite a big difference from last month, and even from the expectation of -15 to +6.6. So now there is start being a little bit of positive feeling within the manufacturers. Then during the night this morning, we saw the Bank of Japan came out with the interest rate again, which in Japan is negative at the moment and hasn't been changed for a long time, as you can see. So since here the last 6 months has been kept at -0.1%. And the kind of like the monetary policy statement that is now starting to look even less hawkish than expected when the new governor of the Bank of Japan came into power. So at the moment, nothing changes with Japan's monetary policy, and that probably is going to indicate that, with all likelihood, the Nikkei index is going to carry on hitting new highs and growing, because there is no worry at the moment that they might start increasing interest rates. Today there isn't that much coming up, apart from there are some inflation figures for Europe, the CPI for Europe, and there's a consumer sentiment index being published at 3 p.m. So in the US, but no major announcements to come for the rest of the day. Now, let me just share a few things with you. So, and this is the thing that we're going to start worrying a little bit. Okay, so there is a Federal Monetary Committee, and you can see how their stance has changed since March to where we are now in June. Okay, so the dotted line was the projections that they had in March, and as you can see, so the projections for a kind of like a percentage range increase in the GDP, and how it's changed now. The blue histograms are the expected projections now. So now the outlook for the list, this is talking about the members of the Federal Monetary Committee. The outlook is a lot more positive according to them. Let's remember, they don't know everything. Okay, so this is just what they expect and what they are communicating to the rest of the world. Okay, so it doesn't mean that this is what is going to happen. So let's make it that very, very clear. Okay, so that's how they shifted. They now have a more positive outlook, and that obviously will influence the monetary policy. And you can see also the risk to the GDP growth. So the risk from their projections, where before in March, and again look at the dotted line, was mainly weighted to the downside. Okay, now this weight to the downside has reduced, is much more balanced in the sense that they expect their projections to hold. And even now, some of them are actually thinking that they might on the upside. Okay, and again, this is what they are trying to communicate to the market. So what they are really predicting is kind of like a Cinderella story in a way. Okay, so the best case scenario. Obviously, whenever they do, they have kind of a best case scenario, middle of the range, a worst case scenario. Okay, what you see here, their projections are the best case scenario for them. So in the sense that the economy is going to be strong enough and it will keep growing more than expected in previous communications. Not only that, but they're going to be strong enough to be able to withhold higher interest rates and still carry on growing at very strong rates. Okay, now this then has been, this information is then filtered by the markets that will then show in their numbers if they believe that this is going to happen or not. And this is seen here, for example, in the bond and interest rates expectations. So this is what they are communicating, the orange line, how the rates are going to move according to them, but what the market expects is a lot lower than that. Okay, so the market has already priced what Jerome Powell said in his press conference was a load of rubbish, and it was just posturing. Okay, so they don't believe that there's going to be the market, the rates are going to top at above 6%, but they believe that this is so they already have reached the maximum peak of the interest rates. Okay, and they will drop, more rapidly than the Fed is expecting. So they were talking about the end of, beginning of 2024, with the rates to be 4.6%. The market is expecting, around 3.5% instead. And by the end of 2025 to get back to about 3% rates against expectation of 3.5. So, as I said, the market has pretty much discounted what the Fed was saying and expected to, to have topped out the interest rate hikes. Now, what does that mean though, especially for the stock market and what is going on right now? So this shows you the difference in price between options to buy and options to sell. Okay, puts are options to sell and calls are options to buy. So normally options to sell are always more expensive than options to buy, because it's basically like an insurance policy that people want to protect themselves against a downside in the market. So they often are bought as a kind of a portfolio insurance. Okay, but at this rate, this is the lowest that the premium for puts has been compared to calls in a long time. That means the market is not expecting the prices to go down. So in a way, it's kind of like all systems go, and this is what is being priced with no protection. So like really, the market is not expecting any bad news anytime soon. Now, the only way that we can try and, I'm not saying I know exactly what's going to happen. We can look at the past and see what happens in similar situation, and generally the kind of like the before a recession, we always have a period when the market rally with the expectation that it's not going to happen after all, and then there's kind of like a surprise. The markets are surprised by the by the figures, and then we are now in a recession, and then there is a very rapid adjustments to the new reality. This is what happened, for example, in the last recession in 2007, 2008, and this is kind of like the between before the recession hit. So what happened in returns between March and September of 2007. And as you can see, they were kind of like there were the stock markets that were growing. You can see the returns here of the stock markets, or at least the technology. So the best performers were the technology shares. Just compare it to what's happening right now. Which market is outperforming right now? Is technology familiar to you? Are kind of like Tesla, Apple, Microsoft, all hitting, really good results, really good returns, and is the more kind of like mid-range index, the Russell 2000, wasn't doing very much, while the Nasdaq and S&P 500. I mean, just bear in mind that all the top performers in the Nasdaq are also part of the S&P 500. So it's, the Nasdaq grows very much. S&P 500 will grow as well, because Google, Microsoft, Tesla are also part of the S&P 500, and high results in those shares would drive the broader index up as well. So at the same time as that was happening, the bonds were not doing very much at the stable of, as you can see, dropping slightly. There was kind of a difference from this picture to now, is that the commodities were rallying, which is not happening right now. So it's kind of a slightly different picture. But one of the other things that was happening is that the US dollar was losing across the board. So as you can see here, all like kind of negative numbers. And one of the kind of the more successful strategies at the time was the carry trade. So buying high interest paying currencies against the US dollar. So sorry, against low interest rate paying currencies, okay, and benefiting by the difference in interest rates. Now, is this a good thing or not? What we see in all this push on the upside. Now, we can say now what this situation, the way it is described now, it's higher for longer. Okay, and we've gone back. If you see what the situation was in March, and this was before the banking crisis, before SVW, Silicon Valley Bank failed. There was almost like everybody was expecting the markets to keep going higher. And then we got to the point on between April and May, almost like nobody was expecting the markets to go higher. Actually, we're expecting for a drop. And now we've gone back to kind of very high expectations. Now, the numbers, what I can tell you is that I don't know, anything can happen, because the market, just the one thing to realize is that the markets are not the economy. They're two separate things. And sometimes the things can go in the same direction, agree with each other. And very often, though, they go in opposite directions, because there is a lag between what's happening in the economy and when people realize that there is a new narrative. So at the moment, the numbers are not supporting this outlook. Okay, it's almost as if you can imagine kind of like a bet. Everybody's betting one thing and nobody's betting the other. Okay, so if there is a reason why now the other potential for the markets to go down becomes more realistic, then the adjustment will be very sudden. Okay, and this is why kind of like at the moment is kind of the longer term strategies can actually look attractive in a way, because it's very difficult to time a market top. or to know exactly when the market will have then corrected enough to start growing again. So, if there are no interest rate rises, but the interest rate might be starting to drop by the end of the year, what would become more valuable in that case? One thing we could say, for certain, is that the bond values will go up if interest rates come down, because obviously the high interest rates that you could gain by having a bond now, the moment the interest rates go down, you'll still be paid the higher interest rate. So as a coupon, so the value of the underlying bond actually goes up because it reflects that. Whether if the interest rates go up, the bonds become less valuable. Okay. Now let's move on to some.
Look, do you think that the things are, like you said, they're throwing this scenario out there, but do you just think that they're trying to sort of wishful thinking or sort of manipulate things to basically, protect the banking industry?
No, it's not so much. I mean, there's two separate things. I mean, when talking about the Fed and the economy, they're in a really bad situation, but they're trying to engineer a soft landing. Because that's the best outcome for them. They will minimize disruption. Okay, but they are getting kind of like very, very low on the tools that they can use, because the economic conditions will only allow them to do certain things. So they are trying to kind of lead the markets, which they have been able to do, but this has been an exception to the rule in the past year, because normally, they are not. I mean, the bond market dominates the narrative generally, because even the U.S. government is not cannot take actions. They are big enough to affect the bond, the short-term bond market, because the market is just too big. So they can try to change the narrative in a way to reassure everybody that everything will be okay, everything will be rosy, so no need to worry, no need to panic. And this is what they're trying to do with the bank failures as well. They're trying to kind of like push away any worry that there could be a collapse of the banking system. And at the same time, when that was happening, there's been this increase in the narrative against crypto, because where before it was just like crypto was seen like a gimmick. In the past 12 months, it's become a real threat to the banking sector, and the banking sector, and generally speaking, what crypto is doing that is threatening to the banking industry and to governments in general, is that it will, the more people use crypto as a form of payments, the less people will use cash, and dollar and other currencies. So that's the way that they make money. So for all the financial sector and banking, so that's a lot of power. When you're thinking about that, everything you spend on a credit card, there's a chunk of that gets siphoned away, and that feeds all, apart from Visa, MasterCard, it feeds all the banks and everything like this. If you use Bitcoin, that doesn't happen. Okay, and so there is a big problem, because if crypto was to take a lot of traffic away from the banking sector, that will reduce it will reduce comparatively not just the money that they receive in terms of bottom line, but also their ability to generate returns. And many institutions work on very, very tight margins. So where you might think, oh, what's the problem if the banking returns go down by 5%? Well, there's a very big problem, because that will not just mean less profits, less dividends, it would mean literally banks going to the wall, and then that cascading, starting a cascading effect. So the one thing is that they're trying to manage in the economy, and on the other side is trying to do something to kind of keep up the banking industry that could really start a kind of like a 1929 situation if it was to collapse, which obviously that would be definitely the worst of the worst case scenarios. But from the point of view of crypto, and this is what we got to worry about, because we're talking about the crypto hour here. This is one of the biggest news this week. And BlackRock, I mean, we all know about BlackRock, yeah, the biggest fund manager by far. Now they have filed a spot Bitcoin ETF for a spot Bitcoin ETF. Now, this is just a filing, doesn't mean that this will be approved. And so far, there have been many different providers that have tried that filed for Bitcoin ETFs, but they're all being rejected. So, and obviously, BlackRock must know something, or must have been given some assurances, because it's very unlikely that they would put their name to such a thing if they don't have a good chance of getting approved. Okay, and why is this kind of like, does this come to attention right at the time when everybody's worried about crypto? The prices are going down. There is this problem with Binance and with Coinbase being sued. And all of a sudden, BlackRock steps in. Okay, and this is what kind of like starts people thinking, and this is kind of like another article talking about, is this a good thing or not, even if it was approved, because at the moment it's just a filing. So if it gets rejected, then nothing really happens. There are a lot of people like Mike Novogratz, which is the CEO of Galaxy Digital, thinking yes, the BlackRock getting a Bitcoin ETF would be the best thing that could happen to Bitcoin. And yes, probably the prices of Bitcoin would then really pump and really start going up. But at the same time, it's kind of like somebody like BlackRock has the capital to pretty much like buy out the crypto industry outright. Okay, and what makes you think is that is this concerted, like the announcements of the SEC, the announcement by BlackRock, to being able to scoop up a lot of the kind of like tokens like Bitcoin, Ethereum, Cardano, and so on, at a really, really cheap price. Because that's the thing. At the moment, crypto prices are still very low compared to other asset classes, compared to the stock market. And in dollar terms, 1 trillion, which is the value of the whole crypto sector, is nothing compared to the other markets. So they could, with something like this, we could see in a way almost like a corporate takeover of Bitcoin, and pushing out small investors to then favor kind of like institutional investors coming in and buying these things, and actually they then will reap the benefits of the next bull run, the next bull cycle. That will definitely, I mean, this is kind of like what I think, I might be wrong, but will definitely push Bitcoin into the six figures. And that's just for Bitcoin. But when if that happens, remember that we are at 25,000. So if we're talking about Bitcoin growing 4 times or more from when we are now, it means that many of the altcoins in the same time will grow 10, 15, 20 times. Okay, because in a bull market, once Bitcoin has performed its growth, then altcoins take over and grow at much higher rates, because they are kind of pushed by enthusiasm into this new asset class that is outperforming everything. Okay, so this is the thing, and this is kind of like what a lot of people in the industry are saying. Wall Street is going to sweep in and buy up our entire industry for pennies on the dollar. Okay, so And so this is the big worry, and why I was showing you stuff like this. Because this doesn't make sense to me. If you follow the thing, trying to match up the kind of the big movements to kind of like news and announcements, and kind of like for something like this to happen at weekends, it's kind of unusual. Okay. And this is a time when there is pressure also on the Binance USD as well. So you're thinking a lot of people selling Bitcoin for BUSD. It doesn't really make a lot of sense. Okay, other things. While this is happening in the US, so the US is going all out to fight crypto. What other announcements could there be? What could happen that could push the prices even lower? Because I don't think we have reached the bottom, to be honest with you. So I think, if in all likelihood, the next move is still going to be down. And there are a couple of things that have been talked about in the media, and you can follow, if you follow the crypto media, you may have heard about it. Okay, and there's two things. One of them is kind of the next attack from the SEC could concern Tether. Okay, and if in some way Tether is attacked by the SEC, and that causes a withdrawal of funds away from Tether, just remember that Tether is the stable coin that holds most of the liquidity, is the highest stable coin by market cap. So that could affect the crypto market quite severely. Okay, it doesn't mean that, again, long term nothing will change, but short term it could affect the prices quite strongly. On the other piece of news is the Curve. Curve is one of the protocols where people are staking, and in one of the most solid DeFi protocols. Now, there is kind of a news that that there has been a loan by its funder taking on Aave, and Curve tokens have been deposited as collateral. So what could happen is that if the value falls below 37 cents, there could be a liquidation triggered. Okay, so then what happens is that these tokens will be locked in the smart contract until a buyer will then settle and liquidate the collateral. Okay, so again, if that happens, it could have quite a profound effect on the crypto prices in general. Again, not long term, because it doesn't say, it's not anything about the Curve protocol, but just like, 35, a lot of millions of those tokens hitting the market at the same time, and also affect many of the liquidity pools on Curve, because Curve tokens is together with Ethereum and other stable coins, Bitcoin, and so on. They hold a lot of those tokens in a liquidity pool. So if the price goes down a lot, people will look to get out of the liquidity pools, because that means that they will lose value in the other side. So generally speaking, liquidity pools need to keep the same, roughly the same level of 2 or more even tokens that are part of the pool. If one goes down strongly, like it could be in the case for Curve, that means that the liquidity pool will sell the other tokens and will buy Curve tokens. Okay, because they need to keep the value similar. So the equivalent effect is what you all know by impermanent loss. So a lot of people that provide liquidity to these liquidity pools could lose a lot of value. Okay, obviously it's impermanent because you only make it permanent when you withdraw your funds from the liquidity pool, and when you get less than what you put in originally. Okay, but these are two things that could push the price of cryptos, even lower. Okay, and this is why I'm thinking at the moment, with crypto investment as such, kind of if you already are in crypto, like myself, I got a lot of funds in crypto as well. I'm not looking to kind of like to buy new ones, but the ones I have, I'm holding, because I am I'm considering the long-term future of crypto. But if you have funds sitting on the side, and if you have taken some profits during the bull run, you should have a good war chest sitting in stable coins. But it's not time to deploy yet, so to speak. At the moment it's time to sit on the side and wait for something bad to happen, and that would be the best time to buy. Not quite yet. Now let's talk about some kind of like better news in a way. What do we have? Sorry, I don't know why I have this here. Oh yes, this basically the US with the cases against the Binance and Coinbase are in a way pushing crypto exchanges away from the US market. So what's happening now? This opens a kind of whenever there is a problem, there's also opportunity. So this opportunity is being filled by Asian jurisdictions like Hong Kong, Singapore, to offer place where the markets can operate. And this is kind of like funny because after China has pushed had a kind of like a real impetus against crypto to begin with, now Hong Kong, which now is part of China, obviously, is now trying to attract exchanges as a kind of like as a good thing to have, and is encouraging banks as well to deal with crypto customers. Okay, now so this is actually a good thing in a way, because it shows that the US is not the be all and end all of crypto. Let me just show you. We had some figures. I don't know if it was in this article or not. Okay, no, somewhere else. So I'm just trying to find the numbers for you, but I can't quite remember where I saw them. But so where the US was kind of dominating about 85% of the global crypto market and volumes, that number now has gone down to around 70%. So and slowly, as you can see, funds crypto funds are leaving the US and finding other places. And who has taken these funds, mainly speaking, has been oh, there we are. That's the place. Is they found their way into Asia, rather than other places like Europe. So where we are. So you will see the beginning of 2023. We had the crypto market share in the US was 85%, and now we are at 70%. This is the day after the SEC lawsuit. And again, increasingly, like 10% has been the increase. So like American entities hold 11% less Bitcoin than last year, and Asian entities are now increased by almost 10% over the same period. So you can see as funds have moved from the US to other jurisdictions, and now there isn't an accepted standard for legislation regarding crypto. But now, and where I I don't know. I think I might have deleted. Where is it? Sorry. I look at so many things sometimes and I forget where I see things. But the European legislation will be coming into force at the end of the month. Okay, so and it will start taking effect a year from then. Okay, so although it just applies to the European Union, we now will have a I'm not saying a standard, but we'll have an example, a template that other jurisdictions may or may not want to follow. So in the past, there's always followed the model from the US, for doing things, for regulating new things. And now it seems the US has kind of declined to be a leader in this market. It could become Europe. I'd say so MiCA was accepted, and will go for the final vote on the 29th of June. And if, assuming like it should be, that it goes through, and will then take effect a year from that. So that would then cause a lot of the crypto companies to apply for licenses in Europe. And if it's something that will start working over the next year or so, it might be adopted from other jurisdictions in Asia, maybe in the UK as well, and so on. So it could be the start of what a lot of crypto companies have been crying out for. They're saying, well, if you tell us that we're not doing things correctly, then tell us what we should be doing to be compliant. And this is a framework, like it or not, where the crypto companies could be compliant, at least in Europe. On a positive note, maybe, because we've been talking about problems mostly today. The Strike app, which is the app they actually developed, the system that's being used in El Salvador, has now extended its reach to Mexico for cross-border payments. So, and again, just remember that this service is, so we're talking about remittances mainly, okay? But just, again, think about not so much, mature economies like the US, Europe, or Japan, but where crypto really comes into being useful to people on the ground, is that people that don't have access to normal financial or banking services. So, and this is what Strike is trying to do. Not just obviously El Salvador has accepted Bitcoin as legal tender, but just using something like the Lightning Network to move funds across border now has made it possible for people from the US to using the Lightning Network to move funds to Mexico, and that would be received by Mexican people directly in their bank account. So it's compare this, something that would cost cents compared to something like Western Union, for example, to move funds around. It makes a huge difference, to the people that are using the service. Okay, and remember that most remittances are not for millions, but just for a few $100s. So and often the cost of moving funds around, it can be as high as 20% plus. To simply send your money from A to B, which is almost criminal when you think about it. So this is kind of like a real benefit of crypto. This is one of the technologies. Obviously, other technologies that are being used. We all know about Ripple. We all know about XLM. And so there are many other cryptocurrencies could be used for for systems like this. But this is a real life example. So it's already out there. And if you're in the US, you can use it to send money to Mexico or El Salvador really very, very easily and really seamlessly. Okay, so I think I've talked enough for one day. So let me just stop sharing and let's see what questions we have.
Hi, Luca.
Hey.
I heard you saying that, the crypto market is, could still go down further, and it seems like there's enough bad news to sort of do that. But I was looking, if Bitcoin goes back up to its all-time high, it's going to go up by about 150%. And ETH would do about 165. But when I look at Cardano, it'll go up 1,000% if it goes back to its all-time high. And Solana's 1,700% back to its all-time high. It feels like that might be worth a small investment in those, just because that's just too good a return not to, really. It seems like.
Well, you answered your own question, I think, Jeff. Because
I'm just trying to ask someone else is the logic sort of compelling or not. It's
yeah, definitely. I mean, you obviously, this is no investment advisor. I'm not an investment advisor, so
agreed.
Just remember that definitely it's already paid out 20% plus if you have bought Cardano, really on the eve of the panic. Because let me see what the prices were.
0.26.
They went down to 21 cents, I think.
Yeah.
So yeah, went down at 22. At the moment, he's sitting at 26. So and if you look at maybe if you want me to show you. The difference is that Cardano, can you see my screen? Can you see the graph right now? Okay. So this is the price of Cardano, okay? Just against the US dollar, so USDT. Let me go into kind of like a weekly chart. Okay, so you see now where we reach levels that we saw at the end of 2020. Okay.
Yeah.
But also, even more than that, if we, instead of looking at it against the dollar, look at it against Bitcoin or Ethereum, again, we are at the same level here against Bitcoin, but against Ethereum is even starker than that. So we are now at kind of like almost like all-time low levels, apart from a spike in 2018. So at any time since 2018, the relationship between Cardano and Ethereum has never been this low. So yeah, long term, if you just do a, if we just add, so no, where's the average? I'm sorry, no, I don't need two of those. So if we go and see the long-term average, so you can see the long-term average is about 35. So we even kind of like more than double what it is now. So eventually averages work. So this is a 200 period moving average for a weekly chart. So this is kind of like a 4-year average. Okay, very, 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 very long term. You can play around with the numbers just to look what's the average for the last couple of years. For example, we do a 100 period. So that's a bit less stark, but it's still very high levels compared to where we are now. And as you can see, the average is what it is a median. Okay, so sometimes price will be above, sometimes price will be below. But what you can pretty much guarantee is that at a certain time, then the two will meet again. So at which level they will meet, because obviously now the average is pointing down because the relationship is below that. So but they could meet somewhere between this point. So the reason why it is so low right now is because of that, especially that drop is because of the case, the SEC case, because Ethereum and Bitcoin haven't been mentioned as securities where Cardano has. Okay, so if that is the case, there is a strong there would be a strong differential between Cardano, Solana, and other tokens and Ethereum and Bitcoin, the way they've been treated in the US. Okay, so a lot of people have rushed selling to sell those tokens, and even some platforms have delisted Cardano, like Robinhood, for example. So, and this is why you see these things. But obviously, whenever there's something like this, there's always an opportunity, and this is, you see how quickly. Obviously, we haven't gone back to previous levels, but let's go to a daily. You can see there was a spike to the news, but very quickly, the price has gone from 12 to 16, 15, 16. So we're talking about, you know, more than 25%, I think. Let me see. You would have had to be very quick to kind of exchange at those levels, but we're almost 30%. We've gone up at 35, but where we're standing right now is almost 28% from the low. So yes, I tend to agree with you. It's the prices are not at the lowest. Buying these tokens with cash, you're always kind of making a judgment on how low the cash price could go, but definitely the relationship between some of these tokens, Cardano, Solana, and Matic especially, those were the three that were expressly mentioned, and Ethereum or Bitcoin, it could, if you already have crypto, it might help to move things around a little bit, especially if they're both part of your long-term portfolio. So moving some Ethereum into Cardano and then moving back from Cardano to Ethereum when prices have normalized again could be a strategy. I'm not saying something that you advise you to do, because I'm not, remember, there's no financial advice, but it's just an idea.
Thank you.
No worries.
So just a quick one. I looked at stock market. Apple is up 50% this year and Tesla's up 150% this year. Is with all the increase in interest rates, what's driving those up so much?
The bubbles. So at the moment, the relationship between tech prices and the general stock market prices of the other companies on the stock market is at the same level that we've had in the year 2000, when we had a huge technology bubble, So we are at those levels again, and again, I wouldn't go out and buy those kind of shares right now. Agreed. Because they will go back to normal, back to average. But yeah, at the moment we are in a huge bubble, and as I was showing you before, nobody has priced anything bad happening in the next few months. So if, as I think probably there's something like that is going to happen, because we're going into a deflationary situation that will not be good for the economy, and so we will go into a recession. Then we the ones that have gone up the most are the ones that will come down the most as well.
Okay, thank you.
The Pierre is the same for Nvidia. Has been kind of slightly different in a way, but it's being pushed by the AI narrative, and they producing the chips that are used for artificial intelligence. But it's all the same. I mean, just basically 5 or 6 stocks are responsible for most of the increase of the indexes this year. There's no, if you look at the difference between the Nasdaq and even the S&P 500 and the Russell 2000, that is telling you everything you need to know. So I will consider the Russell 2000 really like the real economy, and the other ones are just like a few multinational players that are basically scooping everything up. Okay, we come to 9 o'clock. Any last minute questions before we close for the week? And remember, Jonathan's session will start at 9:30 as usual. So please go and join Jonathan's session as well. Any last minute questions before we go? No? Okay. All right, guys. So for those of you that are joining the investor challenge with AIW, I will probably see you there later. But otherwise, have a great weekend, and I will catch up with you again next week. I will put, for those of you who are part of my group, have a look on Discord, because I will show you the example of yesterday's gold monster trade. And otherwise, I will catch up with you on Monday or next Friday. Okay, so see you again soon. Have a great weekend.
Thanks, Susan.
Thanks, Andrew.